currently, in fact, very, very fascinating topic. Electric vehicle stocks. This is what we want to have a look at today. Tesla, NIO, XPEV, and we want to answer the question, who's hot, who's not. To be honest, when looking at all those three, I have to admit that I consider all of them to be hot right now, but it's probably a little too much into the introduction here. And yeah, so what we want to have a look at is we want to have a look at the global EV sector. So EVs, electric vehicles, have seen a tremendous run over the course of the last 12 months. In fact, I'd say probably not 12 months, but probably starting from the second half of 2020 on. So last week on, well, it was Friday, I think. It was Good Friday, if I'm not mistaken. There was a very interesting release. There was the Tesla delivered vehicles numbers, which were published. And numbers were expected to come in around 170,000, 172,000, if I'm not that wrong here. And so it was said that it produced over 180,000 vehicles, delivered nearly 185 in the first quarter. And this even though there was a potential, how can we say that? Yeah, a shortage of semiconductor within the semiconductor industry. That was something NIO, direct Chinese competitor of Tesla, mentioned here. In fact, in their earnings release that was at the beginning of last month, early March. And so to make long thing short, this is a quite impressive number, even though price action hasn't been that bullish as of now. So we have some trouble to recapture 700 here in case of Tesla. NIO has seen some weakness. XPEV is all in all quite stable when looking here in comparison to especially NIO. And so what we want to do is we not just want to shine a light at the current situation within these stocks, but what we want to also do is we want to give an idea of the overall developments which could be expected here within the next, let's say, 7 to 8, 10 years probably. And this is exactly what we want to shine a light on today. So let me share my screen here with you, and then let's get things started. Let me just check the chat box, by the way, if everything's fine. Yeah, everything's cool. So let me just here say hello. And in addition to that, by the way, and we are also streaming this on YouTube. For all those watching us over on the YouTube channel right now, please also feel free to ask your questions there. So we have also here lots of attendees. I just checked the numbers here within this event on Zoom. But in addition to that, I have also here the chat box open on the YouTube channel from Admiral Markets. You can, or I recommend subscribing to the YouTube channel from Admirals here. And also feel free to ask your questions there if you have any. And so what we want to do now is we want to go here through, first of all, the host, or I'm the co-host in this case, so of this webinar today, who makes all this possible. It's Admirals, and Admirals just saw a rebranding. So Admiral Markets is now Admirals, and this is due to the fact, and you can see this here in the upcoming slide, this is due to the fact that Admirals is mainly known to be a financial service provider in the FX and CFD industry, but is now also adding more financial services to their overall business. And for example, you have now a credit card, for example, and so this will be there will be further products being offered over the course of the next years in this context, and thus the rebranding to Admirals. I'm located in Berlin in Germany, so when it comes to my person, so my name is Jens. I'm a trader, professional trader now for nearly 20 years, 15 years. Hi, Anna. So in this context, I'm located in Berlin in Germany, and here over here in Germany, we refer to Admirals as the so-called DAX expert, with the potentially probably a most competitive offering when it comes to FX and CFD trading, especially CFD trading in this context. And but in addition to that, beside of this very competitive CFD offering when it comes to the DAX, also in case of FX, you find very tight spreads, very favorable and great trading conditions, quick order execution. So overall, a very, very valuable yeah, or something of high value if you're looking for FX and CFD trading and take it from a professional perspective. So I highly recommend checking out admirals.com or admiralmarkets.com for further information. Reach out. 20 offices around the globe. So even if you're not English speaking, it's not your first language, not your native language, you have a very high chance to reach someone in your native language out there. And yeah, feel free to reach out to Admirals. And let's now have a look here at today's agenda. Let's have a look in this context at the EV sector. That's what we want to do first in the first step. And then we also want to shine a light on what makes China especially special in the EV space. And so as we will see, I mean, there was a nearly vertical move higher in Tesla over this last 6 months of 2020. We've seen a split of 5-1. And the stock again made it now to well, yeah, something like 700, 600, 700 bucks, which means nothing more than that the share price would be right now somewhere between 3.5 to 4,000 USD per share. This move alone, well, might probably, or someone might wonder, is there any competitor out there, or why is China, for example, such a big space? Is Tesla somehow making progress in getting included within that market? And the answer to this is yes. Still, there are direct competitors, as I already pointed out, NIO, XPEV, for example, those two companies especially. And what's very interesting in this context is that the Chinese government is really after some supporting these companies in the EV space, and why this is, and still why Tesla has a big advantage compared to, for example, European competitors. Probably you've watched the price action in the EV sector over here in Germany, Volkswagen, for example, but also BMW, also Audi. Yeah, Audi too, but Audi is not included in the DAX, so probably you probably have seen it, but still not that of that high interest probably this stock. But let's come back to the developments here. I mean, well, over the Easter weekend, I talked to my brother, who's an engineer and working for one of the biggest companies who delivers products and works on products for Volkswagen. And who was kind of surprised to see these developments here in the stock from Volkswagen, because he said, well, this is purely speculative what's currently going on there, and they have a long way to go to catch up to Tesla especially. And he's kind of surprised to see the current speculation currently taking place. In addition to that, also we have seen developments in the US, for example, with I think was Ford, or I think it was Ford. I'm not really sure. Probably it was General Motors, but I think it was Ford. And there was also saying that they are also looking at the EV space right now. And Elon Musk, the CEO from Tesla, as far as I saw it, said something like, well, he really looks forward to these direct competitive moves from the direct competition here in this context, because the thing is that once you for example, get a car in the EV space, which is not a Tesla, you will probably rather sooner or later switch over to Tesla, because you say, well, this is the place to be. And so competition is something positive then in this case for Tesla. But probably China is a little different story there. And that's why we want to have a look here, and probably NIO or XPEV, let's see, can see a similar sharp move higher. Well, NIO already pushed higher. I think the stock traded something around $3-5 or something. The beginning of 2020 saw high, was traded as high as 65, if not mistaken. Now saw a corrective move, but still trades quite elevated compared to the starting price of 2020. And again, what we will do at the end, but I think you can already answer the third question, my top 3 electric vehicle stocks. This is what we want to give a look at, and a deeper look at, in fact, and shine a deeper light on here in the third bullet point. So first of all, let's have a look at the EV sector. Let me just check out here. Okay, perfect. And by the way, also, but before I forget it, now you have the chance to ask your questions directly in the YouTube channel from Admirals. But in addition to that, also feel free to comment below the video, ask your questions there. If you have anything, we're watching now the recording of the weekend, whatever. If you have any questions, any comments, any suggestions, anything which you think is also hot and should be a topic in one of our next hot topic webinars, feel free to post the comments in the chat box below, please. So we highly appreciate that, and yeah, we look forward to it. So now let's have a look here at the EV sector. And so first of all, let me just see. There we go. I think I just clicked a button which I shouldn't have clicked here. So now software is opening in the background. Oh, but okay. So the global electric vehicle market was valued at around 162 billion US dollar in 2019 and is projected to reach 802 billion by 2027. So what you can already see is that there's some kind of increase of something like 4 to 5 times the overall value of the electric vehicle sector. And what's very interesting in this context, and there we can already see where China comes into play. So the Asian Pacific market here was the highest revenue contributor, accounting for 84.84 billion US dollar in 2019, and also estimated to reach 357.81 billion USD by 2027. So you can already see that here in this context now, China will most likely play a very, very important role. In comparison, North America is estimated to reach here 194.2 billion USD by 2027. So around half of what the Asia Pacific region is expected. And so that being said, Asia Pacific and Europe collectively accounted for around 74.8% share in 2019, with Asia Pacific constituting around 52.3% share of the overall value of the EV sector. And so that being said, the China or the Asia Pacific region, and especially China here, will see increased demand for electric vehicles in the upcoming year as it works out. As the way, I just have to think about it a little. I think the data, where did I get it from? I think it was McKinsey. So it was mainly, so this is open data, let's call it. So you can just Google and you will find these numbers for yourself. So probably you find updated numbers now for 2020. I took the ones from 2019 because we mainly want to look at the 3 hot names in this sector here, especially. But overall, we can say that this hasn't dramatically changed. Probably what the market currently does, especially when looking at the developments in the share price from Tesla or NIO in this context, is to play catch up in this case and reach or push higher in expectation of these numbers being reached. And so now what we want to do is we want to first of all answer the question here: what's special about China in the EV space? And so here in this context, first of all, in absolute terms, China remained, in fact, the world's largest electric vehicle market with 2.3 million electric vehicles in active use, which is nearly half, so around 45%, so nearly half of the global stock of EVs, electric vehicles. Europe and the US are relatively far behind here with 1.2 and 1.1 million electric vehicles, respectively. Okay, so that means if you take Europe and the US together, they account for the same amount of electric vehicles in active use than China. And so there's something now which I already mentioned in this context. I mentioned already the Chinese government and the strong support here from the Chinese government, which in 2020 here lifted taxes or has given considerable amount of tax exemption on purchase of electric vehicles. So there was also something in this regard which we saw happening it probably was one of the reasons. Let's put it that way. So we will have a look here at the chart from Tesla in the next slide. But you probably have seen that there was a massive rise into the yearly end close of 2020. And there is probably two potential drivers. First, probably the most important driver was the inclusion of Tesla into the S&P, and due to the company and its market capitalization, you saw a natural demand into the stock, driven by all those ETFs who now had to focus on buying Tesla stock in this case to include it within their portfolio, and have thus an ETF which is consisting of the constituents in this case, which are listed in the ETF, and in this case the SP 500. But in addition to that, there was also the US election. And with Joe Biden being elected, we also know that now someone is in the White House as the president of the United States, who is who has kind of a, let's say, a green thumb probably. So that sounds a little ridiculous probably, but all in all, the overall agenda from the Democratic Party in the US clearly indicated right at the beginning that there will be more kind of a green touch, or some regenerative sources which are which will be supported. Let's put it that way. In addition to that, it wasn't only the electric vehicle sector. For example, there was also some strong demand which we could see in so-called pot stocks. Stocks which are profiting from a potential legalization of marijuana in this context, for example. So like Tilray, or I think Grow Company. I'm not really sure. So the ticker symbol is GRWG. So so several of these stocks, for example, also saw some sharp rises. In addition to that, Tilray also saw a quite heavy move at the beginning of February, if I'm not mistaken, due to this GameStop volatility and the craziness which happened there, and due to the fact that Tilray, TLRY, was also heavily a shorted stock, and thus this squeeze potential was also used here from this, let's call it the Reddit retail trader army, whatever. But let's come back to the electric vehicle sector. So in this context, there's increasing support from the US government as well. But all in all, this is something which is already taking place in China in this context. And so these initiatives by the government have attracted a lot of customers to purchase electric vehicles in China. For example, in April 2020, so there we go. In April 2020, the Chinese government has introduced a 10% service tax waiver for electric vehicles here to boost the demand of the market due to the COVID-19 pandemic in this context, or the COVID-19 impact the pandemic had here. And that's an overall very positive environment for electric vehicle producers, even foreigners like Tesla in this context. So here in this context, it's probably important to note, while some companies like NIO or XPEV in this context, as we will see in the upcoming slides, are certainly Chinese companies, and we'll see stronger support as Tesla will see. Tesla and its electric vehicle sales here in China saw in 2020 an overall revenue of $6.66 billion here, which accounted for around 21% of the 31.54 billion total, and this in comparison in 2019, for example. So Tesla's Chinese sales here of electric vehicles in China reached 2.98 billion. So what you can already see. It was just 12% of the 24.58 billion in total, in fact. And so what you can clearly see here in this context is there's a clear growth aspect also included here for Tesla in its business it's doing currently in China. So which means nothing more than even if you currently wonder whether this is a sustainable move, whether the growth outlook for an an electric vehicle producer like Tesla, for example, in this context, is justified from a pure fundamental perspective. I think alone, the fact that the Chinese market is expected to grow that much, as we pointed out here, and the current positioning of Tesla within the Chinese markets, I think this alone is probably one of the reasons why you could at least expect a quite solid consolidation at the current elevated, as we see it, or some might probably see it, elevated levels from a probably also price to earnings perspective in this context, for example. But in addition to that, it's also probably something we should take into account, that Tesla is not necessarily a car producer alone. So probably it makes more sense to see Tesla more like a company which is also delivering products which go far beyond, in this context, of only producing electric vehicles, like charging stations and all that, and giving also its input here for direct competitors. And thus, there is a clear dependency from these competitors, from Tesla, to somehow try to profit from the knowledge Tesla and the experience Tesla has already reached within this industry here over due to doing its business over the last I'm sorry, I just lost the whatever I wanted to say. I just lost it. So, however, one second. So Vitor asks, possible risks from military questions raised by the Chinese government concerning video cameras in the Teslas. That's an interesting point. I have to look this up. So it's an interesting question. In fact, I'm not that deep in the matter. So the thing is, that's also something which happened over the course of the last probably 12 months due to a Corona pandemic and the current media coverage of the Corona pandemic, but also the tensions here between the U.S. and China and all this. I started to really not focus that much on these. How can I say that? Developments or discussions taking place here, because that's I'm not really sure whether that makes so much sense to take this into account, or it's more like kind of what in Germany we call this Nebelkerze. So let me just see whether I can see what's the English word for this. One second, let me just see. One sec. Yes. So, okay, I see. That makes sense. They have been subject of Chinese government suspects of spy. So let me just see. Okay, so that's at least good. So let me just see. Yeah, smoke grenade. Yeah. Well, that's not necessarily what I want to talk about. So, but I think you get the sense. So, okay, I see. So again, I have to look this up myself for further details. I'm not really sure whether that has a long-term impact on the overall business relationship from Tesla in China. So Adno adds that Tesla says that cameras inside its cars are not activated outside of North America on its social media pages on Weibo, Chinese Twitter. So Weibo is the equivalent of Chinese Twitter in this case. So like social media sites, and then that's something which is quoted by Reuters. But again, first of all, I haven't heard about this, or I didn't take it into account here for this presentation. In addition to that, I'm also not really sure, even if I had taken it into account, that whether that makes a long-term or has a potential long-term impact on the overall business developments in China from Tesla in this context. Yeah, let's have another look at this here. So in case of Mihai, who asks whether I think that the Tesla share price will reach 900 again this year. So let's see. Probably probably go higher, probably lower. It depends a little on what we can what we will see here within the next months in terms of developments, and not just in terms of developments for Tesla itself from business perspective, but also in terms of overall, how can we say that? How can you call that? Overall developments from a deleveraging perspective. So first of all, here is a look now at the current developments which took place here over the last 12 months or even longer than that. So we're going back here to 2019, in fact, and we can see developments in terms of market cap, which massively spiked here in at the beginning of 2020, when we reached a market cap of 800 billion, nearly 1 trillion. And then there was this COVID-19 pandemic, which hit here, and which brought us back to a market cap of something around 200 billion, and then we just took off. So that was, I think, was somewhere mid-March to end of March. We bottomed out somewhere around 90. In fact, this is split adjusted. So what this means is that the share price here dropped to 450, and since there was this split of 1 to 5, which took place here, so you can see it here with the S. So now you have to take 450 divided by 5, and then you get 90. So just to make sure that we are all on the same page here. And then, as you can see, the stock just took off, and from around 90, we saw a 10-folder, a 10-bagger within the next months, inclusion within the S&P. So here is this massive rise which took place then after the election from Joe Biden. So we traded around 450, split adjusted, so it's something like 2,000, and nearly doubled within the next 2 months. So that was the election from Joe Biden, and you can see that there's potentially an impact. But in addition to that, there was also the announcement shortly before that, I'm not really sure, that there will be the inclusion into the S&P. So there were two very bullish triggers, which resulted in this sharp rise here and nearly doubled the stock price again. So now we've seen a quite heavy bounce in this context, which happened here. That was especially, and there you can see that there's a strong correlation between the current yield developments and then also the tech and growth sector in general. So Tesla is a 100% growth stock. And growth stocks usually profit from a low yield market environment in which we currently find ourselves, and we will likely find ourselves still within this low yield environment within the next 5 years, by the way. So the reason for that is because such companies usually pay low, if they pay a dividend at all. And so what we see here is the pure 100% growth outlook in the developments of these companies then. Once yields start to rise for whatever reason, most likely the current rise in yields and the stabilization at an elevated level has nothing really to do with the overall economic outlook, but it's more due to the rising inflation fears around market participants. And still, once yields start to push higher, you usually see starting so-called rotation from growth into value. And here, especially companies like Tesla are hit quite heavy, especially if they've seen a run, which the company saw over the course of the last 12 months around. So that was still a corrective move, which is completely fine. And it's not of such a big deal, to be honest, especially because we now working here on holding. We saw, in fact, so this is a little unfortunate because once I took the screenshot, that was before we reached another leg lower, which brought us to somewhere around 550, around the lows that were around here. And then we now bounced back. We saw these strong delivery numbers, and the company is now topping slightly below 700. Having trouble to recapture that level. I think this could be a bullish catalyst, by the way. So to answer the question, in this context, can we see 900? I think this is definitely something which is possible, probably even quicker than many of us think, if we reclaim here the region around 700, 730. If we break above that region, we have minimum potential up to 800, probably even higher than that, depending a little on how we react here. Still, we need to be careful, because the thing is that I have to say that the strong delivery numbers, and since most of that was probably priced in, especially after the sharper leg lower here, and yeah, that being said, that market participants awaited these numbers and now see that the numbers came in way above expectations, surprising market participants, and then that we do not make it back above 700, 730. That's probably something which at least let me raise an eyebrow, let's say, and then say, well, this doesn't look that promising, at least not right now. Probably, and this is also something why I mentioned that, have a look at the developments currently in the NASDAQ 100, for example. So we made it around or above 13,300, if I'm not mistaken. Let me just check the screen here. Where do we have it? So it's Q's 324. I think Q's were 324. So yeah, that's like, must have been something like that. 13,300, something like that. We broke that level, and we now continue or we eye new all-time highs. And this is something, even though Tesla does not play such a big role in the NASDAQ here in this context. So looking at the S&P, still, that's something where there's a buzz around. Or no, that was wrong. So certainly Tesla plays a role in the Nasdaq, but there's more kind of a buzz around, let's say. So usually you see a spillover effect. So especially retail traders started to focus heavily on the developments in Tesla over the course of the last months. And once you talked about stocks, you could be sure, even though there were not that much parties due to the lockdown and all that stuff over the last 6 months, but if you talk to someone, or if there was a topic on social media, on Twitter, you certainly saw people talking about the developments in Tesla, or people were talking about the latest tweets from the Tesla CEO, Elon Musk, and what he's currently seeing within the crypto environment. Oh, wow, he tweets something about Doge or a Bitcoin. Well, great, let me just buy that. So there was all the time there was some kind of connection here to Tesla. And what's certainly interesting in this context is that these strong delivery numbers did not see this break higher. And in addition to that, they did not follow the break higher in the NASDAQ, which is at least a sign that there's probably a short-term top in if we do not capture 700, 730 quite quick, let's put it that way. And so that being said, the question, if we can reach that level, well, I certainly think we can reach that level, even though if we fail to capture 700 now and see a deeper corrective move, probably we'll see a move here as low as 500, probably even lower than that. This region here of the September, November lows, especially if there's some kind of deleveraging taking place for whatever trigger, sharp spike in yields higher, some kind of geopolitical tensions building, may it be between the US and Russia, may it be between the US and China, whatever. So if there's some kind of external catalyst which drives the overall market lower, then a push lower in Tesla could be seen. Still, this region here around 450 is definitely, from a risk reward perspective, given the overall growth outlook, which we will look at in the following slides, gives you a quite attractive risk reward, in my opinion, which then has the potential probably to reach even faster than many anticipate. Levels of 900 probably even push above 1,000 again. And why do I say that? Well, because I think, and there we come back to many of the hot topic webinars and trading spotlight webinars we did in the past, we come to the overall expectation from my end that central banks have no other choice than to continue to deliver liquidity for financial markets, keep yields low. And again, especially companies with such a strong growth outlook as Tesla and such a, let's call it, buzz around, have some serious upside potential in such an environment. Even though short term there might be some headwinds, still longer term you will see that Tesla, as we will see in the following slides, then the Tesla in this context, but also NIO, but also XPEV here, have some serious upside potential. So that brings us to my top three, in fact, electric vehicle stocks. So As you may have guessed, Tesla is one of them. But also, again, NIO Limited. So by the way, here with the hashtag, you can, in the brackets, you can see that this is CFD. You can trade via Admirals here in this case. So you can go over, check out the products page here, and you can see that it's not just possible, by the way, to trade it here from the long and short side with the CFD, but in addition to that, you have also via the Admirals invest solution, via the MT5, also the possibility here to directly invest or buy the stock, the physical stock here. In this case, not just Tesla, but also NIO and Xpeng, which is short then with XPEV in this context. And what we want to do now, even though I've already said something, let's put it that way, when it comes to Tesla here, let's have a, by the way, I did a mistake. That's not so good. One second, please. I just have to see. One second. I just saw that I did a kind of a mistake, let's say, because I forgot to update the charts. And when we look at NIO in the upcoming picture, or also XPEV, you will see that I have a placeholder there, NVIDIA. But just one second, I just here have this chart, so which I'll include here. And in addition to that, I'll also have a chart here on XPEV. One second. So as you can see, this is live. So I'm really sorry. This is so unprofessional. So one second. Let me just here. So I have Xpeng. You will also see that Xpeng, by the way, went public last year in August. So which is also kind of interesting to note in this context. Let me just see here. So let me take this out. So there we go. So the reason, by the way, I used here in this context, I used a trading view chart and not the MetaTrader, in which I could also have taken the screenshot, is because here you have the possibility to underlie or to give a market cap here also as a view. As you will see in the upcoming slides, you have the volume below that. Based on the volume which is traded on the NIO in this context. And so that being said, this is the explanation for that. You can also get those charts within the MetaTrader, by the way, so MT5. I highly recommend doing that. So now let's have a look here at some of the latest fundamentals from Tesla in this context. So as we already know, Tesla is an American electric vehicle and clean energy company. This is one important aspect, clean energy company. This is already adding or giving some better understanding of what I'm talking about when I say, well, Tesla is not the classic electric vehicle a producer in this context, like, for example, Volkswagen or like BMW, for example, but it's a clean energy company, which has many more facets, in fact. And this should be taken into account, especially when looking at such current market valuations as we currently see. As you can see here, so we have a current market cap of 658.88 billion. That is making Tesla one of the top 10 within the S&P 500. And there's already some optimists. I think that this is not really unrealistic, but still, I'm not really sure whether we will reach that level within the next probably 12 months. Let's see how things develop. But there are optimists out there, traders out there, financial market analysts out there saying, well, Tesla has probably the potential to be the next $1 trillion company. So following Apple and Amazon in this context. Given the overall Q4 results, they were solid, but not outstanding. So delivery numbers were quite good, quite solid. But when looking, for example, at the Q4 2020 EPS here, you had an adjusted EPS of 80 cents per share. So earnings per share in this case versus $1.03 expected. And the revenue beat slightly expectations with 10.74 billion versus 10.4 billion expected. So they're still on the growth path here. But, and this is the thing, as you can see here, latest numbers, especially after here, the latest earnings report, which was, no, I'm sorry, not the latest earnings report. So here we had numbers which came in February. But as you can see here, we have seen lots of good numbers being priced in due to the election of Biden, due to the inclusion in the S&P, and the massive run higher in the stock. And most of this growth outlook, short term at least, being priced in already, makes it likelier that numbers are likely to disappoint. So these numbers came in solidly, still in a difficult environment with the current developments in yields. But all in all, numbers have to really beat expectations, as simply they did here with the delivery in this context, to really see some kind of bullish catalyst, or initiate some kind of bullish catalyst here, pushing the share price higher on these numbers. And so what's certainly interesting in this context when looking at the numbers, latest numbers, is that Tesla gave some guidance on sales here going forward, writing over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. And in this context, by the way, we should also take into account the developments currently taking place in these gigafactories. One is built here in Berlin, or at least close to Berlin, and the other is built in China. Is it China, or is it? I'm not sure. I'm so focused on Berlin that I was it China? I'm not really sure. I think there was also some discussions around a gigafactory, but I'm not sure whether it's the factory which is built or planned to be built, at least in Texas. But however, the thing is that this is one of the reasons, and probably this is also resulting in my overall skepticism. In the German media, for example, the developments around Tesla and they being, a direct competitor to the big German car vehicle builders like Volkswagen, like BMW in this context, like Daimler. You have, I mean, how can we say that? We have a direct competitor, and thus the overall media coverage is not very positive. This is also true here for all the developments taking place around the Gigafactory and all the potential hurdles Tesla faces here, more and more and more and more, with regulatory developments and all this. That's one of the reasons why I'm at least a little more conservative, but still, I think given this outlook, they will find somehow a way to achieve these annual growth developments, average growth, annual growth in vehicle deliveries in this context. And what certainly will be of interest here, and this is something which will naturally then also influence here directly the direction, respectively, the developments post these data, which will be published in terms of earnings releases and that stuff, is that in 21, Tesla expects even faster delivery growth. So they continue to expect to gain further momentum here. Again, Q1 already surprised on the upside. And they expect here in this context 2 new factories expected to come online this year, and updated versions in this context here of its Model S and Model X, now in the early stages of productions. I think they also surprised on the upside here with the numbers they delivered, or they gave here last week on Friday. And in this context, by the way, also this is something to take into account. Let me just see. We will see that in the next slide. So if you asked me that question, let's say 1 month ago, I probably would have said NIO So the question from Sebastian in this case is, who do you think will be the #1 EV company from China, NIO, Xpeng, or Li? We will look at NIO and Xpeng here. Li is also a direct competitor. I think probably XPEV has some further potential here. I talked to a guy who also worked in China and said, given what he sees so far, and also the communication around the companies, he thinks that NIO, or no, the other way around, Xpeng has more growth potential here than NIO. But again, we will look at this in the upcoming slide. But let me just check here. I just saw that there was also a question on the shortage of, where do you have it? On the shortage of, there we have it. On the shortage of chip shortage, semiconductor shortage here in the EV sector, and effect on 21 stock price. So again, as I already mentioned, and this is something which was mentioned here from NIO. NIO mentioned exactly that, as we will see here, in their earnings release last month, early March. So first of all, who is NIO? NIO is a Chinese automobile manufacturer specializing in designing and developing electric vehicles. Quelle surprise. The company is also involved in the FIA Formula E Championship, and which is the first single-seater all-electric racing series with a current market cap of 69.62 billion, by the way. Yes, the charts are included now. Yeah, great. And so what you can see here is that they're not making any money. In fact, they were on the brink of bankruptcy in 2018, I think, and they got saved by the Chinese government. It's a very important component to consider, because this perfectly illustrates how big the support from the Chinese government will be. And if they really want to push a company or build a direct competitor here of Tesla, or profit from the overall developments within the EV space within the next decade, I think China will certainly do lots or give lots of support here for their companies, which is one of the reasons why I consider investments probably in Chinese electric vehicle companies at least of some interest here in this context, depending on who you think will outperform. At the end, I don't think it matters. It really matters if it's NIO or it's the XPEV. I think both have quite a solid growth outlooks. And even if they miss on expectations at one point or the other, or they will face some headwinds, you should expect these companies to profit longer term from the support of the Chinese government. And so let's come back to the Q4 2020 EPS in this case. So minus 0.414. Missing estimate of minus 0.07. Revenue came in better than expected. And so what was certainly of interest, and this is where the point comes into play here with the worldwide shortage of semiconductors, it means that it will make fewer vehicles in the second quarter. This is very important to note, because numbers for the first quarter came in better and quite solid. I think, I'm not really sure, was it NIO or was it XPEV, but already before, numbers from car vehicles or car deliveries were published from Tesla. There were also some strong numbers here from the Chinese market, but only for Q1. So the thing is that the worldwide shortage of semiconductors here will make it likely that we have fewer vehicles in the second quarter. So next numbers, which will be partially published next month, not next month, but next quarter. Then in this context, we just entered the second quarter, and it's still forecasted 20 to 25,000 deliveries in Q1. Anticipates deliveries will rise to at least 7,197 in March. And that was strong because Xpeng mentioned only a delivery of 2,223 electric vehicles in January. So given that information, you would probably come to the conclusion, probably NIO has some kind of a better outlook. But shortly after I wrote this slide here, and I read this news around this former guy working in China just mentioned that he's also closely watching the developments in the electric vehicle space here in China too. And from his point of view, NIO is not as of the from quality wise, it's not of the quality as you might see XPEV here in this context. So XPEV he thinks is has a better outlook. And what was certainly interesting, that was something I especially saw from an intraday trading perspective. So I heavily traded NIO, for example, at the beginning of last month, with the earnings release and the higher volatility, and not just the volatility given by the earnings release, but also in addition to the developments in the tech space in general, given all the developments in yields. And what was very interesting was that after this push lower here in the stock, so we are talking, this is a daily chart, and we are talking here about, as you can see, this is March, this push lower here. Once we saw the bounce happening here, compared to what XPEV saw percentage-wise, XPEV saw not that much selling pressure at the beginning of March, but also bounced heavier on the rebound and presented itself intraday stronger, at least at these days once I looked at these stocks. So that was, I mean, this is just 1 month, it's several days I look at the intraday action, but that was also something which I consider to be kind of interesting, at least. So let's just introduce XPEV here. So XPEV or Xpeng or Xpeng Motors is also known as xmotors.ai. It's also Chinese electric vehicle manufacturer, current market cap 25.8 billion. They here, as you can see, went public in September last year, and then saw this nearly vertical move higher in November especially, which was most likely mainly driven due to the high positive correlation to Tesla in this context. So the thing is, once you look at this from a trading perspective, I mean, we look at it from a longer term perspective. We look at this from a perspective where you say investments, how are the developments within the next decade? But from a trading perspective itself, I also like to mention that these stocks are currently really hot, deliver great trading opportunities intraday. And what you can also say is that the spread, once you look at current developments in Tesla, for example, the spread here is quite wide, very, very strong moves on the upside, on the downside. So really points you make there intraday. You have to work with quite wide stops, reduced position size, while in stocks like NIO or XPEV, you have very tight stops and you have still very strong moves intraday, which make it more attractive from a trading perspective. So if I, for example, have a news like I saw from Tesla last Friday, and I consider the stock to be hot for the next trading day, Monday, so 2 days ago, I plan to view the price action there, try to trade it. I focus on highly positively correlated stocks like XPEV and especially NIO in this context, and try to capture potential bullish moves here on the upside in this context then in those stocks, because I consider XPEV or NIO more attractive from a trading perspective. So this is for especially more active traders in this context. Yes, positive correlation. That was why I mentioned that. So what's certainly interesting in case of XPEV here is that XPEV announced in January it secured a credit line of 12.8 billion yuan, or around $2 billion, 1.98, from a major Chinese financial institution, which includes 3 of the so-called Big 5 state-owned banks: Bank of China, China Construction Bank, and Agricultural Bank of China in this context, which shows the massive support the electric vehicle sector, in this case XPEV, gets from the Chinese government. And this new credit line, as XPEV announced, will help expanding its manufacturing, sales, and service and other operations. So to make long thing short, to sum all this up probably here in the last slide, as you probably have seen or found out now, it's not that there's one stock which is hot and the other is not. Right now, it's in fact a very strong sector, highly interesting, volatile from a trading perspective, but also longer term. Currently, as you can see here, the current market cap, or in case of 2019, grew even stronger from there. The global electric vehicle market was valued at 162.34 billion US dollar. It's projected to reach 802.81 billion by 2027. And Asia Pacific, as we've also found out, was the highest revenue contributor, accounting for 84.84 billion US dollar in 2019, and is estimated to reach 357.81 by 27. In this context, North America again is estimated to reach 194.2, so around half of what the Asia Pacific region is expected. And that being said, Asia Pacific and Europe especially collectively accounted for around 74.8% market share in 19, with Asia Pacific contributing around 52.3%. That being said, in addition, with the overall outlook when it comes to growth of this sector, when it comes also to the support from the Chinese government, makes, besides Tesla here, certainly NIO and also XPEV likely to continue to perform well in this environment, even though, again, and that's something we've seen, especially at the beginning of March, with elevated volatility. This is a growth sector, so which means nothing more than once you see elevated volatility and a rotation picking up, a rotation trade picking up from growth into value, especially such strong market outperformers as NIO and XPEV have been. Same is also true for Tesla. Over the course of the last months, still that could result in a sharper decline in this price. But again, let's put Tesla and use the numbers here. If Tesla sees a drop to 450 or below 500 USD per share, that's probably still risk reward wise a very, very attractive, from risk reward perspective, very attractive region to consider long engagements against, with the overall target being found somewhere in the region around 900 to 1,000 if things develop as we pointed out. Needs to be seen whether it works out. So still very speculative and highly volatile investment you add to your overall portfolio, but it's definitely worth thinking about adding such a part to your overall trading portfolio. And let me just see. Okay, no, I saw that. I thought that was a private message. Yes, so you can find all the stocks and the products you can trade here. So as we mentioned, Tesla, NIO, XPEV in the chat box. Let me just, by the way, check here YouTube. Is there also a question? Okay, so yeah, that's in fact it for today. So next webinar will take place on next webinar will take place on Friday here together with Paul then in the Trading Spotlight webinar series. He will talk about how to trade the fail to return setup, which will include also how we can, or how he will teach you how to join existing trends if you missed the initial move. And he will also introduce to you the fail to return setup and how to use it in your trading to an existing trend, in fact. So on Friday, 2 p.m. London, 9th of April, you will learn more. Check your inbox for the webinar link if you're already registered. If not, head over to admiralmarkets.com to the educations tab there, webinars, and there you have the Trading Spotlight tab, respectively all webinars, which will take place here. Also the one together with markets each morning in case of the market opening here. For further information on Admiral Markets, check out the website, admirals.com, admiralmarkets.com. Depends on which one you prefer. This is due to the rebranding of Admiral Markets now becoming Admirals. And since it's a highly regulated broker, here's the risk disclaimer. So that's it from my end. I hope you enjoyed it. And if you like what you just saw, if you're watching the recording on YouTube, please leave a thumb up here, leave a comment, subscribe to the YouTube channel. I'd be happy to answer your questions if you have any. And that's it from mine. So all the best, happy trading, watch your stops. Talk to you again next week on Friday. this Friday, you first of all have the pleasure to join Paul. And that's it from my end. So all the best. See you.